Russell Journal. My name is Russell, and this is my journal entry for Thursday, December 15th, 2022. Interesting stuff in the market, a lot of stuff to get to, but what we really need to talk about right now is there's a couple of things I have to preface today's episode with. First of all, the very first thing is that shadow behind me is weird. Anyway, forget about that. Okay, two things. One, leave a comment down below. I think the audio here is a little bit rough. If it is too rough for you guys, please let me know. I want you to enjoy the show. But I am recording in the kitchen right now due to the kind of holidays, and I'm in Vegas and stuff like that. So I will do something to try and get that fixed soon. But until then, please bear with me. Second of all, okay. Here we are coming at the end of FOMC, big market sell-off, this, that, and the other thing. And there's some stuff that we need to talk about, the stuff that I need to put on this thing because I need to log it. And it requires context before we get into the actual heart of the matter. I have been asked how come I focus so much on economic factors, why I look at the news, why I do all of those things, when there's a lot of traders out there who tell you you don't need to look at the news, you just look at the technicals. The technicals will tell you what's going to happen and this, that, and the other thing. And that's fair enough, right? That's actually really fair enough that you can trade that way. And to be honest with you, I imagine most successful traders do. What I will, and I will even admit to the foregone conclusion that most economists make bad traders, right? You can read any number of books. I read Fooled by Randomness. He's got several really great factors in there where he shows sort of economists that misinterpret the market or what the market will do, and things like that. Unfortunately for me, I personally need people to, I need to always see the big picture. I'm a big picture type of person. I can handle losing a trade if I understand the reason why I went short and they went long and they overtook me. I need to understand. I need to know what that is, just for my psychology and my sanity. Also, it has made me a better trader. It's definitely made me a more knowledgeable trader, and I value that. And one of the other things about trading that is appealing to me isn't so much just that it isn't so much that I need to trade and make money, but trading helps me, and the economic, all of the big picture helps me make sense of the world. And that's one of the reasons why I love trading. And finally, here's the other thing about it is I've seen a ton of setups. I've seen a ton of technical things that do stuff. Give me 1 second, guys. This is driving me bananas. Is that gone? No, it's not.
We're ready to fix that.
I don't see it fixed. I still have the back. Am I standing too close to it? Is that it? It's driving me not bonkers. Anyway, so if you're just getting into the stream with us, we're talking about the economic setups versus technical setups. Trading based on economical factors, based on taking trades based on the chart. At the end of the day, you have to take a trade based on the chart and how the chart is moving and how it works. But you also need to understand the risks that are involved with that. And those risks are not always hey, if it hits a certain level and goes to a certain place, it means something, cut the trade, or it means, exit the trade, or that's your risk, right? Risk has a lot to do with how it's not just being at risk. Taking a trade, knowing the risks, isn't just knowing that it's going to go to certain price levels and do different things at different price levels, right? The risk factors are, what is typically the other side of your trade thinking? What is the other side of your trade doing? How are they behaving? Why are they behaving that way? Where will they make a move based on the chart themselves? And so I feel that you need to wrap your head around all of that. And if you fail to wrap your head around all of that, you're going to have a problem, right? If you and that your trading will begin to have a hole in the swing somewhere, right? Because you lose touch with that. So, but again, your trades at the end of the day are always placed based on what the chart is doing. You get bad news and the chart is going up, you should be trading in the upward direction. You get good news and the chart is going down, okay? So, but in order to understand that stuff, you have to understand the different things that the markets can do, the different types of things that the different market and the participants will do. And the number one participant that we don't really talk about, we don't really think about their actions and their behaviors, is the market maker. Now, this is going to take us back now to yesterday's trade setup, where I put on us, I didn't know how the market was going to behave based on the Fed's raising of interest rates, okay? Now, we all knew yesterday 50 basis points was coming. We all knew it. Everybody knew it. We knew it we knew it 2 weeks before. Powell said we can start dialing back how much we raise interest rates by, right? And that it may be appropriate in December for 50 basis points as opposed to 75. There isn't a person out here who didn't know that. So when he comes out and gives you exactly what you want, why did you sell off? Well, the reason it sold off wasn't because of the 50 basis points, okay? Now, there was a little bit of that selling that is typically part of trading, and this is part of knowing what people will do. The first side of that was buy the rumor, sell the news. Okay, great. That is fine, right? The buy the rumor, sell the news type of thing, that's great. You get the announcement, 50 basis points, take your profits. This is a form of trading. We all knew that was coming. It happens every FOMC. You get one typical big move down, followed by the move up of the people who were waiting till they had confirmation of what the Fed was going to do to actually take their position. They didn't want a surprise, right? So normally you could see this sort of push-pull, the sell-off. What surprise did we get then that made things completely different? Well, the surprise that we got was that the Fed is telling you, they're telling you two things. One, we're going to raise rates. We're going to raise them higher than you expect, even though the increments that we'll raise by may be going down, it's still going to be higher than you expect. And the last thing that the Fed told us was, don't you dare loosen those financial conditions. If the S&P tries to make a run for all-time highs, we are going to punish you for that. And the reason they have to take this stance is because they don't want, you're going to hear guys talk about sticky inflation, right? How hard it is to get rents to come back down, how difficult that is going to be. That's not really what they're worried about, right? What they're worried about is the wealth effect. And that means that if the stock market is up, if the stock market is doing good, people are going to feel okay and they're going to go out and spend money, okay? And so if they're going out and spending that money, if they're spending that revenue, right, then prices can't come down. This is also another way where like we can know that the Fed pivot strategy was bogus, because today we got retail sales numbers for last month and they were the lowest they've been in a year. Guess what? If you really are bucking for the end of inflation, this is a huge sign for the end of inflation, right? What you need to see for prices to come down is people to stop spending. That's the whole enchilada. The Fed tightens, people stop spending, prices come down. That's the point of them tightening, is to get people to, right? You're seeing step number 2. All that you have left is to see inflation abate, right? Especially in areas like food, right? Auto sales, that sort of stuff, right? Even at the pump, you stop, okay? So all of this stuff kind of being said, as it were, then knowing how the chart's going to behave in light of that is important. And that's where we think about the market maker and the market maker tricks and the different players within the market. Take my put position yesterday. I saw that put position, and in SPY, the cash equivalent, I knew that the market maker had some hijinks. Now, part of this was some stuff that I missed. I didn't realize that the Bank of England and the European central banks were all going to talk about their interest rate hikes today and what that might mean for the euro. Employment was low, right? Like, first of all, continuing claims have only gone up by like 1,000, and the new claims is down 20,000 from the week prior. So, sorry about my weird head movements here, but there you have it, right? What are you going to do, right? How is that going to work? How's it going to behave, right? Now, there's some stuff that was kind of let me keep that trade on, and the reason I'm talking about it is because I managed to actually break. You saw me last night, you saw the numbers. I was getting my ass kicked in that trade. I was down 50% of my account. It was really bad. This morning, I caught the whole move, pretty much down to 391 is where I came out. You will see on this chart behind you, we did make it all the way down into the 388, upper 387 range. So I did cut it a little early, but at the same time, I'm not willing to, I know now the market maker tricks, and I'm not willing to suffer some of those tricks, especially going through what it is. So at the point I got to break even, you can see over here, I have this call, but that call got paid for. So the whole trade cost me 104. I sold my put for 104. We did good. I did try to catch a bounce in here, cut it when I lost $10. So I'm down $10 for the day, but overall pretty well grateful. And again, some of the stuff I'm being able to do because I understand the economic factors, and I'm going to understand how the market maker is going to behave inside of that, right? Now, one of the things that you will notice here, okay, we have this massive steep decline here, and then you've got this real tight, right? If you look at it, it is a tiny ass little range through here, right? $1 to $2 long periods of time. This is a market maker trick, okay? Now, let's go to the daily chart first, and then we'll come back to this. And we need to also put on the Bollinger Bands. And then can you zoom in to the very end right there? Zoom in all the way. Keep going, keep going, keep going, keep going, keep going. Okay. And then back to me. No, leave it right there. Yeah, that's perfect. Okay. Market maker tricks, right? Especially, okay, so we're looking at this, and we're looking at this volume, and it's a bit inclining, but it's not that big a volume, okay? So I want you to understand, it's not that big a volume. This Bollinger Band is on the daily 2 standard deviations off the mean, okay? The market maker wants to control this market from the mean, okay? This here is your bottom. That is where this right now stops, okay? Now, few things that I want you to take note of. First of all, the gap right here, okay? So we have this gap. Every single person and their dog wants you to come down and fill the gap. We're all looking at it. We've been eyeing it for this whole month. We've been like, oh, when it's going to come back and get that gap, we want to make that money. And you can look and see every time you hit this upper Bollinger Band, you bounced away. Hit it, bounced away. Hit it, bounced away. Come back here, hit it, boom, bounced away. Every single time it was bouncing away from that upper Bollinger Band, okay? You can see that marks the top, okay? Now, here, you're at this lower band. There's a couple of things that can happen here, okay? Here, coming into tomorrow, okay, and this is the thing that's funny, okay? And this is why I think you need to know everything about everything, because people will hit you with stupid conspiracy theories, and there are some that you should be aware of, especially because you need to understand the market maker tricks that we're going to talk about here in a minute. But see this here? That band is the bottom. Tomorrow, this is going to go up. Ironically, tomorrow is quad witching day. You have the quarterlies, the monthlies, the weeklies, right, and the dailies. You have all of those contracts that expire tomorrow, right? Contracts people have been holding for a year expire tomorrow. So what is everybody going to say? Well, you're going to bounce tomorrow. It's going to bounce up, okay? And the reason it's going to bounce up is because the shorts hit their price target down here at 387. They hit it, okay? If you come in and momentum isn't strong to the downside in the first hour of trading, they're going to start to cover, okay? And what everybody's going to say is they're manipulating the market so that the put positions don't have to get paid out, okay? That's what they're going to say. That is not what's happening. Ironically, you hit the price target down here, and it's going to go in the upward direction because everybody who's been short above this level is going to cash in. They're going to take their profits from shorting this, especially in the futures world. I would not be surprised to see this even gap up into the morning, okay? Now, the other thing about it is you do have a gap on the upside of this chart. Who wouldn't want to go back up and fill that gap before you come back down and get this, I think it's this one over here, okay? And that's going to do some stuff for you as a short. It's going to let this Bollinger Band expand so that you can get down into this lower range. As of right now, unless they had momentum really stacked, right? If it had just followed through from up here, then you'd have a different story. But you bounced here, went back to the upper Bollinger Band, and now your momentum is not quite oversold, and it's not embedded in oversold, okay? Now, if you're interested in oversold is 30. Once these two numbers, these two lines hit 30, once that happens, that is oversold. If both of those numbers get below 20, that's really oversold. But as my mentor Ira Epstein talks about, if it has to spend 3 days down in this area to be embedded in oversold. Okay, so that is something that has to happen really in order to do it. Now, my stochastic settings are different than his. He won't tell me or hasn't told me what those are. I should probably email him and try and get those from him. And this is part of his technique, his setup. And he does have a class. No affiliation. I don't get paid anything for this. I just like trading, and I think everybody should learn to do it. But he has a Bollinger Band class. It's I think it's like $100. It's pretty cheap. I took it, and it helped a lot understanding this stuff. So again, you can go to his website, iraepstein.com, and take his class, and it's very good. I highly recommend the guy. Anyway, I hope he ever watches this. Anyway, so again, market maker trick here. You're stuck. The market maker is not going to let it push below that. And if it does, he's going to push back up against it. Okay? If you're a bull, you know to try and get long in there somewhere. Okay? And this is where you're going to see things like, again, some other tricks that the bulls do, which would be a short ladder attack, right? Expect to see a pretty good push up from traders who are trying to squeeze some shorts, who are trying to ride short covering to the upside, right? Now, so I would expect tomorrow to have this thing at least retrace 50% of this move down. I would expect that. That would be what I would be looking to see happen, especially because momentum is up, your bias is down, okay? Your bias is down. You are under the 18-day moving average. You're under the mean. You don't even have to have the 18. You can just go to the mean. And you're again, but you are against. So you're against this lower Bollinger Band. And now Ira will tell you that you're void of trend here, right? You have higher high, lower low. Now you could say lower lows and a higher high, and a high and lower lows. So you do have a shot. If the bears really do want to rally support to their side, they will bring the trend traders in. They will cover. They will let this come up. They will let you have a high in order to let you get short into the trend. That is what you would hope they would do. But also you're in OpEx, so one of the things that you will possibly see is see it go up there, hit that, and then sell off right away, right? You'll see it put in a doge with a lot of wick in it, okay? You will see that happen, okay? So that is a possibility. That's going to give you a little bit of a danger of an inside candle on that, which will give you even more reason to go back up into the upward direction. Also, because one of the things too, and I don't know if they're ready to give up on this yet, you have been in a range between 390 and 400, and so you've really got a shot here where it could bounce. Risk reward is slightly there into some idea of a Santa Claus rally, or in case the money managers want to try and push this up to 415 to get their Christmas bonus, or any number of those things. And this is where, like, again, we think about the different players in the market and what they're doing. We think about the different economic factors, right? Here's the thing. Again, it would take nothing for the bulls to be like, we're getting what we want for the end of inflation, right? They got the rate hikes. They're really close to peak, right? They've only got 75 basis points left to price into this market, which, in all honesty, you ran it all the way up here on hopes of a 50 basis point hike, and you had a dot plot that said there was another 100 on top of that. Now, half of that's gone, and you're gonna be like, okay, well, let's go all the way back down here, 348. Let's go back to the lows. Pretty ridiculous to me, right? So again, here, come in, fill the gap, and I'm going to bet that that's probably when it'll happen. But like I said, short covering into tomorrow, going into the weekend, there's plenty of reason, OpEx, there's plenty of things for it to come into a bounce tomorrow. That's what I would say. I'd say more than likely going to get a bounce. If it doesn't happen tomorrow, maybe it'll be on Monday, right? Few other things that you should be aware of. We've only got 8 trading days left in this year. So there's not, or 9 now, I'm sorry, not 8, 9. But you've only got, next week's a short week, 4 days, week after that's another 4 days. So you're really coming into the end of the year. Few things that could happen here that are also beneficial. Again, stuff that we think about, stuff that we look at, the tricks that they're going to pull. Again, look for a bounce in here, especially because of OpEx. They're not going to want all of these puts to print, right? And if you've learned anything trading this last month, it's been that they want to keep it in these tight ranges. Now, they may try and just pin it against this Bollinger Band here and just leave it flat through there on the next, or slowly grind it down into that. That's all really, really possible. But again, you were kind of looking at it going like, well, what are the tricks? And this is the last thing that I want to talk about as far as the tricks that they do. And I've waited to the end to say this, okay? If you've made it this far, I appreciate you for watching. Okay, I didn't know that they could do this. I knew that there were days when contract premiums were higher than other days. I did not know that they could change that hour by hour. So if you take this call right here, yesterday it was 10 points out of the money. That thing should have cost $20 when I bought it, but I paid 56. Apparently there's a thing that they can do where they raise what's called the vega or the volatility, okay, the implied volatility of contracts. They can use that and reduce the gamma, but they can increase the premium with the higher volatility, and that will be maintained as long as the market maker thinks it should be maintained. So, for example, yesterday my put, I paid $46 for it, and this morning when I woke up, because the volatility had gone out of it, even though I purchased the put when SPY was at 405, I purchased it when we were at 405, it was a 390 put. This morning I got up and we're at 394, 393, and I'm still red. I'm negative $5. It literally took the push from 394. It took a whole nother $3 to break even on the whole trade. So what they had done is they dropped the volatility, lowered the premium value, they hit me with the theta, and then they completely screwed the gamma because it had 1 day left to expire. I didn't know that they would pull all this shit. Like, honestly, had no idea that they could do it. And there's some stuff that I'm beginning to realize is, don't trade contracts on FOMC. Those major events that jack the premiums way up. I mean, they were 2-3 times what they normally are to get into a trade. And because at the moment they feel like volatility should just be gone, they just get rid of the volatility or the vega, and you lose your money. And you have no control over it. It has nothing to do with intrinsic value. It barely has anything to do with extrinsic value. They just do it because they can screw you. And this is where, like, you don't, when we talk, you don't know the risks until you know the risks, that sort of thing. So it's really, really complicated. All right, in the meantime, we will go through the whole thing and then we'll wrap the show up. All right. Trend, void. At best, you've got lower lows, higher high. Okay? At best. Okay. Bias, short. You're under the mean. So you're looking for puts. Momentum, up. Tomorrow it will be turned down a bit. So your momentum will be turned down, but you're oversold. So you're oversold. As of right now, the week is pretty much done. I would say, in all honesty, aside from, unless we see some real movement from some guys rebalancing or starting to do their tax loss harvesting, most of your year is done. And as far as trading goes, especially if you're a trend trader, it's not going to be super great. We might get some tomorrow. Again, we'll see what happens. So the week after Christmas, there may be something. That was probably, as far as the Santa Claus rally, a lot of times that happens the day after everybody gets back from Christmas. Other times it happens just a little bit before Christmas. It all sort of depends on when Santa's coming to town. We will see if we're going to get one. Again, I think that if the chart is wise, it'll come back and try and get that gap right there. But I think they'll fill the one from last night before they go back and get it, because they're going to need to widen that Bollinger Band in order to even get down here. So anyway, that will do it for me today. Thanks for watching. Russell Journal's written, edited, hosted by me, Russell Liss. We are produced by Social Media Shows. Executive producer is Maria Pereza. Check out Social Media Shows. If you do want to do a show like this, they can help you. Fantastic. And until tomorrow, pretend I said some sort of catchphrase.